What is poppin'? What's up? What's up, Bag Brigade? How y'all doing? Hope everybody had a good Memorial Day weekend. It is currently May 27th, Tuesday, the day after Memorial Day weekend. So I want to do a quick update, kind of pre-market prep, all that good stuff. Real quick, what you're looking at here is, I'm sure most of you know what this is. This is the Bag Brigade Discord community. If you're not familiar with it, it's probably because you found this video on YouTube or like Twitter or whatever. But anyways, there's always a link in the description of the video, also on the profile of the YouTube channel and on the profile of the Twitter page. You can click it and it will give you an opportunity to apply to become a member. That's how that works. So if you're interested, I'm not going to go through the server. I'm not doing all that right now. But yeah, I mean, obviously we have some trade alerts, algo alerts, we have data, we have trading floor, some education, non-market stuff, and then just some admin stuff over here. Okay. So anyways, let's get to what I wanted to talk about real quick. So you are looking at, well, what you're looking at is the S&P 500 ETF SPY, which I'm assuming most of y'all know what that is, right? It's the ETF, Exchange Traded Fund of the S&P 500. Anyway, so this is basically just like a Memorial Day week briefing, market outlook, you know, whatever you want to call it. Markets were closed yesterday. But to recap last week, for the week, we're still down about 1.5% on the week. But we are still 20% off of the tariff lows right here. Okay, something like that. But we're still about 5.5% away from all-time highs. See, 5.5%. But these are these numbers I'm speaking of right here. You see, that's the China gap. So there you go. Just wanted to make sure we're on the same page here. Okay. And I mean, obviously, if you don't know, the China gap that we're explaining here was back like, I think it was like May 7th or something like that. I don't remember the exact date. It was when they said that, okay, this was well, not inauguration day, but liberation day, right? April 2nd, somewhere over here, like, and then we just came down big time, right? And then this is about, I think, April 7th, I believe, or the 9th. It doesn't matter. Either way, this is the day that Trump said it's a good day to buy on Twitter. And then he put like, you know, $DJT. And that happened, or I was literally watching the market, the trading, and I didn't think much of that tweet. I thought maybe he was talking about his stupid True Social stock, DJT. But, you know, apparently some people took it seriously, because about 2 hours later, the market just out of nowhere the S&P 500 went up 10%, like in a day, in an hour. which that's unheard of. Like honestly, like that's craziness. Um, I thought the circuit breakers were going to go off, meaning that they were going to halt trading. But I guess that I learned something that day. That only happens on the downside, not the upside. But the next day, guess what? We came down from that huge rally. We came down and we wicked to 7% on the day, -7% on the day. Literally like -7.00 or like 2, like right at it. And that's obviously showing you that there are algos or whatever, bots, or even just people, I don't know, but whatever, just buying right there to keep it from the circuit breakers hitting. Because when the circuit breakers hit, is it -% on the end, -7% on the indices, like the Nasdaq, the SP 500, Dow Jones, things like that. They halt trading for 15 minutes, okay, to let things kind of settle down. When it opens back up and it goes another 7%, like so 14% negative, they halted again for another, I think it's 15 minutes. Maybe it's 30 minutes. Let things settle down. If it continues to, when they open it back up, it continues to sell off. I think it's another 7%. So we're talking about 21% now at this point, or 20% at least. They stopped it stops trading. For the market's closed basically at that point. So I think that's only happened. I don't even think that's ever happened. Maybe in 08. I don't know. Anyways, just giving you a little tidbit there, I guess you can say, that's just I can ramble a little bit, anyways, the dip though, right? Healthy. This dip is what I'm talking about right here. Not this dip. That was not a healthy dip. That was absolute chaos dip. This dip is healthy, right? But remember, well, I'll just show you in a second, but it's a healthy dip. I mean, market's kind of cleaning up some, I guess, sloppy structure from this like melt up that we had after this like China, well, basically from here. But anyways, so let's get into some like macroeconomic headlines real quick. So this is so we had a bad bond auction. I believe it was on Thursday or Friday of last week. It was the 20-year Treasury auction, and it got literally ghosted. Meaning, like, there was just like nobody. So, like, so bonds get yippier. A disappointing 20-year bond auction drove a sharp rise in long yields, like the 20 and the 30-year. So the 30-year cleared 5% again, for this, it's right here, kind of matching, and then the 20-year is basically right where it was too. I mean, 5.12% or so, something like that. I mean, but literally, like yields, like they pierced that 5% level on the 20 and the 30. That's not good. Remember, I mean, just think about it. When you buy a house, typically it's what, 30-year mortgage, 30-year. So that's basically it's interest rates in a sense. Like this is all interest rate driven stuff, inflation driven stuff. The direct bids fell to about, I don't know, like 1 billion. So like bond vigilantes might be flexing or something, pushing back on loose fiscal policy. I don't know, but I'll tell you this: Trump don't give a fuck, or excuse my language. He doesn't care about the stock market. They don't care. The Fed, they don't care about the stocks. Okay, they do not. I mean, they pay attention to them, but they don't care about them. What do they care about? Bonds. I promise you, they will crash this stock market. If the bonds get really bad, they will crash this stock market to save the bond market. I guarantee you this. So all eyes on bonds. I've been saying that for about 2 months now, probably longer than that. Me and Too Woke to Go Broke, my brother from another mother, the co-host of the Bag Brigade podcast and longtime friend of mine. We watch bonds more than we watch stocks, honestly. We literally trade like bond ETFs more than we trade anything else and futures and stuff. So, hey, if you're just looking at SPY and Tesla and NVDA and all that, Google, Apple, you're not looking at everything. You need to look at way more stuff. But this is not what this is about, though. Yeah, it's tariff time again. Um, so let's just read this. This is Trump. I received a call today from Ursula von der Leyen, President of the European Commission, requesting an extension on the June 1st deadline on the 50% tariff with respect to trade in the European Union. I agreed to the extension to July 9th, 2025. It was my privilege to do so. The Commission president said talks will begin rapidly. Thank you for your attention to this matter. It's like duck season, rabbit season, duck season, rabbit season. He did the same thing with China. Oh my God, yeah, we were talking like 145% tariffs, and then, dude, I mean, it's craziness, bro. And then he does this whole 90-day pause thing. Okay, so now he just did it again, right? So, never in the history of my trading career, at least, and I'm pretty sure this just goes across the board. Never in my history, never in the history has the market been so influenced by one man's tweet. This is all this. Let me show you something here real quick. This is the S&P 500. This is SPY, and this is a daily chart. Okay, I mean, like, to get a little clearer for you, let me switch this to this layout so it makes more sense. Okay, these are all daily candles. Okay. This is like October 2023, like Gaza, like all that stuff was going on there. This was, I believe, yes. Wait, no, this was April of 2024. And I forgot. I think the Fed said something, drove the market down a little bit. This was August of 2024 when the bond, the Japanese yen carry trade fiasco happened. If y'all remember that, that was wild. Don't really remember what this was about. I mean, the market does this kind of stuff, right? But then look at this. This is all driven by one man's like tweets or like comments on TV. That's all this. There's nothing else. I mean, tariffs, but that's him saying tariff this, tariff this, tariff that, tariff that, tariff. How much tariff could a woodchuck tariff if a woodchuck could chuck tariff? So it's tariff time again. The proposals, it's not a policy yet, but 25% tariffs on iPhones made outside the U.S. now. 50% flat tariff on EU, but that now has been, I guess, extended till July 9th. I don't know what difference does that make. I mean, if it's still going to happen, it's going to happen. The market, right now, I'll show you, and we're up in pre-market. Futures are up. I mean, the script, it's like a movie. It feels similar, doesn't it? Right? I mean, number one, you make noise. Two, you watch the market reaction. Number three, you walk back via exemptions or pauses. And then it just rinse and repeat. So, like, my takeaway on all of this is it's just more political seasoning than the economic meat that, like, or your steak or your economic state. It's just insane. Like, so until it becomes real, market likely treats this as a headline fluff. I mean, it isn't right now. I mean, I will show you that the market is up currently in pre-market. We haven't started trading because the market opens in an hour. I'm just saying, I wouldn't be shocked if we sell off right at open. But the next thing we got to talk about is NVDA earnings, because they're this week, and that's probably one of the biggest things. Okay, here's so it's all eyes on NVIDIA. They're on Wednesday, so that's going to be tomorrow after the closing bell. Revenue estimates are supposed to be 43.2 billion. That's like a 66% year over year gain. That's right here. Earnings per share estimated to be at 73 cents. That is a 19% increase year over year. The wild card. Any guidance on China chip restrictions or like slowing growth could rock the boat. So you got to think about this. Cool, NVIDIA, if they do really well, like great, they did well. But what if they have a horrible guidance outlook going forward because of what's been going on with tariffs and all this stuff, right? In China. So I would be very cautious on trading NVIDIA options specifically for earnings. Okay, like I would just stay away from them. It ain't worth it. It's just not. You know what I mean? I mean, just think about it because Tesla. Okay, I'll tell you this. Because the big earnings season is kind of winding down, but like when the big techs reported, like, you know, Tesla did horrible. Okay, absolutely horrible on their earnings. Right? They didn't even really give good guidance either. But yet the stock it rallied like crazy. But then you had things like I think it was was it Microsoft or Apple? Either way, like they had decent earnings, right? Like not even really bad guidance, but guess what? Some of them went down, some of them kind of just, you know, trickled around, but nothing significant, even with any of the Mag 7's earnings has happened. I mean, so it's all eyes on NVIDIA at the end of the day. Let's take a quick look real quick here at some snapshots here. So this is the SPY on a weekly candle time frame. So you do have, okay, so here's your weekly gap, right? You have an inverted hammer candle with a failed breakout above the prior high. See, all-time high, right? And that's the failed breakout above the prior high on the weekly candle. See what I'm saying? So there's that. All-time highs up here. Here's your weekly gap. Okay. Your gap close is going to be 5, I believe, 67.75, I think. Even though that doesn't. Oh, that blue line. Yeah. It's 567.75 is where the gap closes at. It's something around that level. Here, I'll show you what it is. The gap close is at 567 and 50-ish. Yeah, so something like that. The top of the gap is 575, like 50, and the bottom is 567.50. Okay, there you go. So let me get back to it though. Okay. But like I said, you know, so this is, to me, I mean, it's bullish. It's still a bullish trend as long as it stays above 550. Okay, 550 is like where we got a higher low. Okay. There's where we got the first higher low after this. So until that, on a weekly time frame, we're bullish. Okay. Daily. So these are daily candles. Okay. We rejected at supply. Friday's gap fill reversal equals short-term pressure. So here's your first key hold level right here. And I believe that is going to be I'm just double checking because I don't have it marked. 575. They're all at 575. I think that's the 100. I don't remember which moving. Oh, here it is. Sorry, that's the 200-day moving average right there. So yeah, look, I mean, it's holding the daily. I mean, the 200-day moving average is like the most important moving average out there, other than I think the 200-week basically. But so obviously, yeah, it kind of stopped itself there on Friday. So Friday's gap fill reversal, like I said, equals short-term pressure. Base case, you know, higher low at 200-day moving average is you know, and then the China gap fill is still in play. Like right here, I can show you clear. So we got a gap to fill right here. 200-day moving average is orange. One right here. I mean, look, you got the 100, the 200, and the 20 all lined up and like just coiled up there, right? You know, so that's just wild, man. You can't make it up, man. Also, so, and I mean, we can get a little more granular, I guess, if you want to. This is the hourly. So 577 is looking like it's going to be the battleground here, people, as you can see. I mean, this is the gap, right? So, or from Monday at least, the China gap, I guess is what they're calling it. Um, boom, 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 boom. And then we gap down on Friday or morning because of like the EU news, like with the 50% tariff thing, and came down to, well, we clipped through it. We clipped through 577, but we obviously held it. So that's the line in the sand. I mean, it's the battleground zone. If we hold it and the trend flips, it's I'd say it's safe to go long. And technically, right now, I mean, let's do a quick check. Where are we? So SPY is currently up in pre-market about 1.5%. It's at 587.31. It's about where that green line is right here. Okay. I'll show you that in a second. I just want to finish going through this. But I will say that if we fail below the 200-day moving average, short go. I'll tell you what I'd be doing. I'd be buying puts to fill this gap right here. Okay, if we break below these, close below them, I'd be really looking at put options on SPY or even the QQQ. Same, they look almost identical. To fill the gap. So, not financial advice, just saying that's what I would be looking at. Okay, sorry. All right, so that's the hourly. Yeah, and this just kind of paints a pretty picture too. 577. We break that, probably come down to 562, which is like where's this area, like this zone at least, and then you can kind of bounce around. I mean, these are these are potential scenarios. That's all I'm getting at. Okay, that's all I'm getting at. So market internals, I post this in the Discord server a lot, and a lot of people don't understand exactly what it is, but let's just say for the internals, Friday's gap was the setup. Did bears jump in? No. Aggressive follow throughs, but they didn't. So yeah, all this does is basically these are just showing you the breadth of the market, right? This is the ES, let's see the S&P futures, your advanced declining line. You got your volts right here, and then you also have like your tick values, and they go zeros the middle line, and then there's the 1,000 and the -1,000. And now you can see there's an X right here. This was on Friday, where again I said if the bears would have jumped in, you would have seen something like this, right? Okay, well you didn't. You didn't see that. It got bought up. So the bears did not slip in. It was a very aggressive follow through to the upside. That's what it was. And that's typical. That's you get bad news in pre-market trading. So of course, people are going to cash open. They're going to buy it. It's not. It's very. I mean, not all the time, but that news wasn't that bad. I mean, the same thing happened with the Moody's downgrade. We came down in pre-market just to literally get bought up. So if you just zoom out, when in doubt, zoom out. Look at what's going on. It'll really help you out. Stop looking at just the 1 minute, 5 minute, 15-minute charts. I mean, you really need to zoom out. And check what's really going on. Market profile, a lot of people don't really understand this one either, but since the bond auction dump price hasn't really reclaimed single prints, these are the prints, right? So Friday showed basically some excess at lows. I mean, bulls need higher value to flip the bias. Tuesday equals, critical tell for direction. I think Tuesday was right here. Yeah, you can just see the follow through. So I'll have to go over. I don't have time to go over how to explain the market profile right now. I really don't. I'm running short on time as it is. But let's talk about junk bonds real quick. So HYG, that is a that's the iShares. I think it's HYG. I think that's I believe it's a junk bond. I know that. I have it on my list. I just don't remember which. I thought I had it on my list, and Shy HYG DXY. Well, I can just type it in. I guess I thought I had it on there. Yeah, I do. It's on there. I just can't. I'm just like blind. It must have got moved around or something. Anyway, let's just go back and look at it. So what it is the iShares, high yield bonds. Those are junk bonds, people. High yield bonds are junk bonds, basically. To track the investment of the market iBox USD liquid high yield index, the underlying index at least. Yeah, it's just they're junk bonds. So they're quietly bullish right now. Is what I'm trying to say. Is they're quietly bullish, meaning like if you look at these charts, right? So neutral divergence with the SPY or the S&P 500, whatever. Useful if you're leaning into these like higher low theses, right? So, I mean, normally they don't move in tandem, okay? It's not typical, but right now you're kind of seeing this happen. The yields, okay? Remember that's the yield. Yeah. So I don't know. Watch the bond market, people. That's all I'm trying to say. Last thing about this, okay, so the slash VX, the VIX futures curve, the volatility index, the VIX, right? So we have several things on here. So this is the VIX, the actual VIX, the volatility index on daily candles, right? And I mean, look, what I'm trying to say is the VIX is not panicking right now. Okay, it's like below, it's like still hanging out below 20. When it's below 20, things tend to be calm. It's when this is when you start seeing this above 20 and you start getting in the 30, 40, 50, $60 range. I mean, on VIX, that's when you see this. That's when you see stuff like this happen to the S&P 500 daily. This, okay, so. Just keep that in mind. All right. Yeah, it's not panicking. The slash VX for the I think it's the June contract for the futures. So it's at the zero line. Still contango. VIX stayed cool on tariffs news. The MFU scale is not really pointing to a full-blown fear yet, so take that for what you want. I don't know. So this coming week, the week ahead, we have a couple things going on. Actually, today, that just happened, didn't it? It did. Let's check the market. That was durable goods month over month. Let's check the market on 5 minute. I don't think it liked it. That news came out about 10 minutes ago. So these are 5 minute candles. You're already coming down now. Look, you gapped up overnight. I mean, you're still way above like where we closed on Friday, but still though. I mean, we can check real quick if you want to. NPRC's Trump, let's see. CNBC should have the report up. I mean, I don't have to go here. Salesforce, NPS, Trump over. Wow, they really don't? What a bunch of idiots, man. They suck. This is our Twitter page, by the way, at the Bag Brigade on Twitter. Let me see if they got something on this. I just want to see the numbers. They should be posted up here in a minute. I'm not gonna try and waste your time doing this. Oh, come on, people. Usually it's like the first thing that pops up on my feed, like when something is. Okay, well, you know what? Who's got the real deal? Holyfield, Trading Economics, calendar. Let's do 2 stars. Okay, so Tuesday, durable goods. Okay, so previous was, so it was forecast to be negative 6.8. It actually was negative 6.3. The previous was 7.8, so that's not good. The durable, that's month over month. Durable goods, excluding transports, I guess, is month over month for April. Forecast was supposed to be -2. It actually came out to be +2. So I don't know. It's a little mixed bag. We got the Chase Killer's home price index coming out in about 15 minutes. I mean, anyways, back to it real quick. let's just finish off this. So we just had these tomorrow on the 28th. We have the Fed minutes, the Fed FOMC, their minutes. So it's basically just the notes from the previous FOMC meeting. They just released those. Sometimes they're going to have an effect, sometimes not. Thursday, 8:30 a.m. Eastern, we have GDP growth rate quarter over quarter. And Friday, we have our core PCE, price index, month over month. So it's a pretty calm calendar, I'd say. GDP revisions, no surprise expected on that. I mean, honestly, PCE, I mean, we've already seen CPI and PPI, not much of a shock value, so I'm not expecting much of a shock value on PCE either. But let's just see what else this week has for me. Because remember, what did I say? All eyes on NVDA, Wednesday after the bell. Top thing to watch, basically, at this point. That's the top watch list. NVIDIA, and yeah, NVIDIA again. Just to break it all down for you real quick, I'm going to summarize this and then I'll be done. Summary for you guys. Okay, so look, healthy pullback, structured repair seems to be in progress, right? Trump tariffs, more noise than bite for now. For now. Who knows what this guy's going to do? These Oompa Loompas looking just, it's a clown show. NVIDIA earnings boss battle. Technicals lean bullish above 550, like I said. Internals saying sellers didn't pass their advantage. Wait and see mode until basically Tuesday's market profile. So that's what's going on. Last Tuesday is when we get at. So anyways, other than that, I kind of wanted to show you something interesting that I'm in. So I bought some GameStop calls for October 17th. Yes, October 17th. This is a 4-hour chart of GameStop. I bought what did I buy? I bought the 35 strike call options expiring on the 17th of October. It is currently trading it closed on Friday at 33.03. It is now at 33.67. Basically, when I bought these contracts, I believe I bought them. What did I buy them for? I think I bought them for. I can check the Discord. We'll check the Discord real quick. Give you a little sneak peek. Trade alert. It's Chuck alert. I made a little thread for it. So I bought them for $385 a pop, and I that's wrong. I got 10 of them. I need to correct that. I don't know why I put 5. I guess I wasn't thinking, but I was just updating like as things started progressing. GameStop started ripping. I don't know if it's in squeeze mode again or what, but by Friday, I mean, I had the 10 contracts. Oh no, I only have 5. I was right. I have 5. No, I bought more. That's what it was. Either way, whatever. That's not the point. The point here, what I'm trying to say is GameStop's been on a tear recently, and I bought them. What day was that? That was on the 16th. Okay, so the 16th was back here. Okay. Yeah, 16th. So what was that? Like 11 days ago, and I got them for $350 something a piece, and they're trading currently at like $630. So they're getting close to being doubled up, Anyways, just thought I'd point that out. I did post actually some stuff about it recently because I was just looking at the charts. So I did do a Twitter post on it. We'll pull that up real quick, and then I'll be done with you. So yeah, GameStop resistance playing hard to get at 33.56 to 34. If it gives in, we might blast off. Indicators flirting with bullish vibes, but weekly RSI is getting sweaty. Squeeze sequel loading? I don't know. Maybe so. Right? There's the overnight gap from this morning. This is on the daily. I meant, crucial resistance, fib levels. You got the RSI right here, bullish crossover on MACD. So every time there's like been a bullish crossover on a MACD, you've seen some sort of uptick on GameStop. But GameStop's just like one of those crazy stocks, man. I don't typically trade it, but anyways, that being said, I mean, I just wanted to point that out, really. Oh wait, there's more. This is on the weekly. So not a lot of volume up here, Pete. That's not. So if you start getting above like this level, like right here, this red box is around like that 35, 30, whatever, 35-ish. Yeah, there's just not a lot. There's never been a lot of volume. So above 34, the volume really reduces significantly, meaning this thing gets squeezed really, really hard. I mean, so above all major weekly moving averages, you get the bullish crossover on the weekly MACD. It's approaching the overbought territory. So, I don't know. We'll see what happens. I mean, I don't typically like to play GameStop, but, I did last year in May and did very well on it when it did squeeze. If y'all don't remember that, it did happen right here. Okay, so if you look at it weekly, you can see this is 2021. This is when the first GameStop thing happened, right? And then it had its moments here and there, but this was the May of 2024. Okay, so it went all the way up to like 65 or something like that. Now in 2021, it went to 120 from like $1 or something. So, and then it went from in May of 2024, it went from like $9 to $64. But it comes right, you got to realize it comes right back down every time. It does not stay up. I mean, these are just quick squeezes. So I don't know what's going to happen. I'm just letting you guys know, like, that's what, just being transparent about it. I don't really need to go over more than that. I, appreciate you tuning in. I will definitely leave a description. I will leave a link of the Discord community in the description. And I will most definitely also, like I said, you can find it in the profile on the web as well. So like on our page, okay, if you just were to go to more right here, there it is right there, okay? And you go to any video, there's going to be the link. Same with Twitter, okay? So if you want the link, that's where it'll be. It'll be in the description of this video. Other than that, let's get ready for this week. I hope everybody has a great trading week. Let's see what Trump does this week. I don't know what he's going to say, what he's going to do, blah, blah, blah. Who knows? But, let's make volatility great again, baby. I'm all about it. On that note, I am going to I'm gonna let you guys go. I do appreciate you tuning in. This is your boy Chuck Taylor, aka Chuck Tizzle, Chuck Boomberg, live and direct coming at you from the Bag Brigade. I will catch you on the next one. See you then.